I think markets come an awful long way, as we know, and they've priced in an awful lot of good news. And you can see that in all sorts of ways. I think the Citi US Economic Surprise Index is a great indicator of that. It's hitting 20-year highs sort of every day over the last couple of weeks, and tells you how much good news is in the price. And also on a sector composition, if you look at the sort of the leadership we've had over the last few months from cyclicals and tech, both look pretty overextended. So the market, I think, has been fascinating since the 8th of June, since it hit that local high on the S&P and across the globe, really. And there's been a real bifurcation playing out since then, and a degree of consolidation. So, yeah, markets are forward-looking, and there's an awful lot of good news in this price. And in fact, I think a lot of that was exemplified by the way bond yields played out yesterday, bouncing up higher initially on that big jobs number, and then of course giving all those back by the end of the session.
Chris, I know it sounds a bit flippant to say it, but you're looking at economic data here. To what extent does the market care at this point? Because it seems that we've had a remarkably strong quarter with economic data continuing to deteriorate.
Well, I think there's something in that. I mean, clearly the market's been, for the last 2 or 3 months, been pricing in a lot of stimulus, and as I say, that unlocking economic bounce. And in a way, you're right. It's incredibly difficult to gauge how important 4 million jobs really is in the context of what it should have been. So the estimates were very finger in the air, and the outcome is great, obviously, but still you have 11% unemployment. So, I think the real issue is why aren't bond yields backing up on this kind of data? For me, that's pretty telling, and that's perhaps telling us about a more troubling outlook. And of course, we forget that what we've really done in the last few months is layer more debt on top of an already very indebted global economy. So, there'll be payback in 2021, 22. This creates all sorts of challenges, and there's an awful lot of damage under the surface that I think is pretty troubling when you look at it.
Here, Chris. Absolutely, there's a lot of problems there. But when you say the market and tilt defensively, you're better than that, because the best performing sector stateside compared with the worst performing sector, tech and energy, they've had a 56% divergence. 56% divergence. So there must be somewhere you think that actually has been left behind, or actually, even with a defensive tilt, has underperformed perhaps a little bit too much, where you think maybe it's worth parking some money.
Well, I think in the very near term, over the next sort of couple of months, I think you should park money in defensives, because if you look at it, some of these defensive sectors are the cheapest they've been pretty much in 20, 30, 40 years. They're real extremes, and we've seen a real relative shift in the valuation of staples, healthcare, even utilities over the last 6 months. And as I say, staples is now as cheap as it was at the peak of the bear market in 2000, 2002, pretty much, and almost as cheap as it's been pretty much at any time in the past on a relative basis. That's relative to the rest of the market, which I think is pretty fascinating, because actually when you look at the market, what you really see is a bit of a bifurcation. There's been a ton of liquidity with all this QE, and therefore that elevated the index in aggregate. But the real winners, as you sort of highlight, has been the sort of tech, the darling stocks, the concept stocks, the pandemic stocks, which are making new highs. And there's been some real losers within that, which has been some of the cyclical areas, as you say, energy struggled, and of course the defensive. So I think in the very near term, I would tilt defensively. Looking out into autumn, into next year, then you want to think about how's your macro view look, how much more stimulus has come, and therefore how do you play it as you get into the autumn. But I think over the summer months, defensives are very oversold and very cheap relative to the rest of the market.